Good morning, traders. Today, we're going to discuss the details of the institutional demand and supply indicator. I've been receiving a lot of requests from people wanting to know how this indicator works and what options it offers. So, in this session, we'll go through each option inside the settings step by step. Once you add the indicator to your chart and click on the settings, the first thing you'll notice is the option to turn the indicator on or off. Here, you'll see 4 different modules. 1. Demand and supply zones. 2. Reversal candles. 3. Price magnet or magic levels. 4. Daily support and resistance levels. These are the 4 main modules of the institutional demand and supply indicator, and you can choose which ones you want to display on your chart. For example, if you click on the demand and supply zones option, it will automatically plot those zones on your chart. If you click it again, it will turn off the zones. The second module is reversal candles. When you select this, it will plot reversal candle patterns directly on your chart. Don't worry, we'll go into more detail on each of these modules later in the video. The third module is the price magnet levels, and the fourth one is the daily support and resistance levels. Again, whichever module you activate by clicking will be plotted on the chart. Stay tuned as we explore each of these options further. Let's walk through the settings of the demand and supply zone indicator, starting with the layout settings. Inside the layout settings, you'll find 3 different options. The first one is layout type, and when you click on it, you'll see 4 options. The first option is support or resistance. Once selected, lines representing support and resistance levels will be drawn on the chart, showing areas where price tends to bounce or reverse. The second option is wick as zone. When you choose this, the indicator will draw demand and supply zones using the candle's wick, from the open or close depending on the candle type and zone type. You'll see that the zones are drawn around the wick only, not the body of the candle. Next is wick and body. Selecting this option will include both the wick and the body in the demand or supply zone. For a demand zone, drawn at the bottom, it will encompass the wick and open of a red candle. For a supply zone, drawn at the top, it will include the wick and open of the top candle. The fourth option is full body, which covers the entire candle body when drawing the zone. Now the next setting is zone count. This allows you to control how many zones are drawn on the chart. You can increase or decrease the number, setting it to values like 30, 35, or 40. Increasing the zone count may slightly impact performance, as the indicator will take more time to draw all those zones, but otherwise it works just fine. The final setting is zone extension. By selecting this, the indicator will extend previously breached demand and supply zones, allowing you to see price levels from the past where the market reacted. This gives you a clearer picture of past price action and potential future reactions. Now let's move on to the high probability zone settings. High probability zones are areas where the price has a higher chance of reacting. This setting measures the strength at which the price reacted from a specific level, and by default, the strength level is set to 6. If you increase this to 7 or 8, you'll notice that fewer zones appear on the chart. This is because fewer zones meet the strength breakout criteria as you raise the number. I recommend keeping this option enabled and experimenting with the settings, aiming for a range between 6 and 10 to match your trading style. Next, in the basic settings, there are 2 options: directional candle count and zone validity percentage. Let's break these down. First, directional candle count refers to the number of candles moving in the same direction that you want the indicator to consider before classifying an area as a demand or supply zone. For example, if you set this number to 2, the indicator will check for 2 consecutive bullish or bearish candles before marking a zone. As an example, if you see 2 bullish candles, the zone will be marked as a demand zone. However, if you increase the count to 3, the zone will only show if there are 3 consecutive bullish or bearish candles. So adjusting this number filters zones based on consecutive candles. Second, zone validity percentage defines the percentage move the price must make after forming a demand or supply zone. This setting helps confirm if the zone has strength based on price movement. For example, you can set the percentage to the 0.25%. After a demand zone forms, the indicator will check for consecutive bullish candles and verify if they've moved at least 0.25%. If they have, the demand zone is validated. Similarly, it works in reverse for a supply zone with consecutive bearish candles. These settings help fine-tune how zones are identified and validated, so adjusting them can really enhance your trading precision. I've already created a detailed video on how to set up alerts. You can watch it by clicking the I button in the top right corner of the screen. Let's go over the channel and color settings with a more streamlined format. Background color, demand and supply. You can change the background color for demand and supply zones. Customize these colors to help distinguish the zones visually. Channel color. This option allows you to change the color of the lines outlining the channels. For example, if you select a demand zone and change its color to black, the channel outlines will also change to black. You can choose between 3 line styles for the channels: solid, dotted, or dashed. Pick the style that best fits your preference. Background color transparency. Adjust the transparency of the background color for the zones. This lets you control how opaque or transparent the demand and supply zones appear. Channel line width. Modify the thickness of the channel lines. You can set the width to your liking, such as 2, 3, or 4, to make the lines thinner or thicker. Channel line transparency. Control the transparency of the channel lines with a default of 30%. You can increase or decrease this value to match your visual preferences. All of these options allow you to fully customize the appearance of your demand and supply zones, helping you tailor them to your specific trading and charting needs. The Price Magnet Levels Indicator is a small yet incredibly powerful tool designed to help traders identify key market levels that attract price movements. Whether you're a beginner or an experienced trader, this tool can significantly enhance your trading strategy by pinpointing strong support and resistance levels. These levels are crucial because they act like magnets, drawing the price toward them. They can be used effectively as targets for scalping, a strategy that involves quick trades to capture small price movements. The Price Magnet Indicator uses advanced calculations to identify crucial support and resistance levels on the price chart. These levels highlight areas where there is strong interest from buyers or sellers, making them reliable for trading decisions. The indicator is highly effective because of its accuracy, providing precise levels that attract price movements. This accuracy helps traders make informed decisions about where to enter or exit trades. You're on the gold 1-hour chart, looking to take an entry at the supply zone on 11th September at 11:30 a.m. To set your target, use the price magnet levels. First, calculate the gap between the high and the top bar of the price magnet level. Let's assume the gap is 0.51%. Next, calculate a 0.51% move from the bottom bar of the price magnet level. Draw a line at that calculated level. This line will serve as your target if you're shorting gold from the supply zone. Using the price magnet levels like this helps set a precise and realistic target based on key support and resistance levels. Understanding reversal candles and triangular signals. I've been receiving consistent queries regarding the blue and red triangles, with many interpreting them as direct signals to buy or sell. It is important to note that these triangles should not be viewed as explicit buy or sell signals. Instead, they serve as potential indicators of market reversals and should be analyzed alongside other technical factors before making trading decisions. Reversal candles. Reversal candles are crucial indicators that may signify the beginning of a new trend or a shift in the current market direction. They often appear near key support or resistance levels, marking a significant change in market sentiment. These candles can signal when a trend is weakening, and traders should be on alert for possible reversals. Blue triangles typically suggest a potential bullish reversal, signaling the possible start of an uptrend. They mark critical points where buying pressure could increase. Red triangles, on the other hand, generally indicate a potential bearish reversal, signaling the possible start of a downtrend where selling pressure may rise. Key takeaway: These triangles highlight moments of market volatility where trend reversals could occur, but they should not be interpreted as standalone buy or sell signals. To make informed trading decisions, traders must use these triangles in conjunction with other market indicators and technical analysis. Proper analysis of these signals, when combined with trend lines, volume, and broader market conditions, can help enhance trading strategies and improve the timing of entry and exit points in trades. Daily support and resistance levels for intraday trading. The Daily Support and Resistance Levels tool is specifically designed to assist intraday traders in identifying key reversal areas by marking critical support and resistance zones, helping traders spot areas where the market may change direction. While it is particularly beneficial for day traders, swing and positional traders who focus on short-term timeframes can also find it useful. Red zone resistance. This marks a level where the price is likely to encounter selling pressure, which may cause a reversal or downward movement. Green zone, support. This represents a level where buying pressure could push the price upwards, preventing it from falling further. On average, the price tends to remain within these zones about 80% of the time, making these levels highly reliable for intraday trades. The tool calculates these zones using the average of the previous day's price levels, helping traders more accurately forecast support and resistance levels for the current day. By using these zones, traders can better plan their entries, exits, stop-loss levels, and target prices based on where the current price is relative to these support and resistance levels. This provides an edge in risk management by allowing traders to respond more effectively to market movements. Additional feature. If you go into the tool's settings and scroll down, you'll find an option labeled Hide Previous Zones. By unticking this option, you can view all historical resistance and support levels drawn on the chart. Observing these past levels reveals that prices tend to stay within these zones most of the day, unless significant institutional buying or selling disrupts the trend. This functionality provides valuable historical insight. One great feature of this indicator is its versatility. You can plot it on any time frame, whether it's a seconds chart, minutes, hours, days, weeks, or even months. This makes it useful not just for day traders, but also for swing, short-term, medium-term, and long-term traders. Another key advantage is that the indicator doesn't repaint, meaning once a demand or supply zone is drawn, it remains fixed and won't be redrawn or deleted, even if the price moves in the opposite direction. That's all for now on the institutional demand and supply indicator. Any new features or updates will be covered in a separate video. If you have any questions, feel free to message me on TradingView or Telegram at Stable Logic. Thank you for trying out this indicator. I hope you find it valuable. Goodbye for now, and happy trading.